Hey, good morning. It's Thursday, the 14th. Hope you're all doing well. Just wanted to give you a quick insight into uh, being a master of self-employed income. And while I'm not 100% a master, I am able to turn some things around for people that don't necessarily get the focus or the effort from other people. And so I've got a borrower right now that we have in the pipeline. It's a VA loan, which is even more important to me. He is exempt from the funding fee, which is awesome. He still is active in the Army Reserve, so we got some of that paycheck. However, this man had brought to us on the surface, if you would have just looked at the self-employed income, he brought in a negative $2,000 or a $2,000 loss from a business that we couldn't hide because we have to show the tax returns because he has other self-employed income. And so had we removed the business income, he also has, let's see, 10 rental properties? Yeah, 10 rental properties underneath his personal name. And in that business, there is another 25 more. So he has a total of 35 rental properties. And I guarantee you he went somewhere else and asked somebody some other questions, and they looked at it and it was too complicated. And they said, nope, you've got a negative. It washes everything out and nothing works. So here's the advantage of understanding how tax returns work. We were actually, by UWM's underwriters, were told that he would have to be hit for the full $2,000 loss. And really, when we dug into the tax returns, we were actually able to show that there was $1,000 a month in depreciation. So it's actually a little bit more than that. It's about $13,000 in depreciation that they weren't accrediting towards him. And so we actually got that number bumped up to 1,000. And this is what we had submitted it with. And they were fighting against our number and they declined the loan. So the power of understanding the self-employed income, it got me this client. This is a $481,000 VA loan. Pretty awesome on the new comp plan there. And he's exempt. He's buying a duplex. And so we were able to then use the rent from the second unit towards his purchase. And the crazy thing, so we have debt to income ratio of 41.9 and back end of 66.34. And we were able to get an approved eligible. We have a required VA residual income because we are over that 41% debt to income ratio. We have a required residual income of $529.20. Our residual income comes in at $581. So we are over the residual income for him. And this is obviously an investor, right? He's going to buy other properties. And because we were able to flip a deal around by knowing the tax return guidelines and understanding what we can add back, we were able to create a $481,000 loan plus whatever else he buys on an investment side. We're going to be able to do them on DSCR loans and make sure they're closing inside his LLC. And we will basically become the lender for all of his other loans because we were able to dive into those returns and actually understand what they look like instead of just seeing the $2,000 negative and wiping them away. So this gives us such a huge advantage moving forward. So I'm going to encourage you to sign up for these MGIC classes. The tax return classes are so important. And it really is where I started. I was with Radian when I started, and this is how I learned tax returns, was going to these webinars and really, really diving in. And now we've gotten to a point of where we understand them considerably more, and we're able to turn loans that got turned down by other people. We're able to turn them around and fund them. Hope you have a good rest of the week. Let me know if you have any questions.